Good afternoon, everyone, and welcome to our YouTube presentation live stream of Trending Thursday. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Glad to be here after I was under the weather for the last couple of days, and now I'm back. Joey is here. Say hi, Joey.
Hi.
That's my producer. He's the guy that makes everything happen on the technical side. So, if you're here and you want to chat in, by all means, please do chat in. Jay, how are you? Happy New Year to everyone. And again, I am glad to be here. Good afternoon, Paul. Good afternoon, Mike. All right, so again, as you feel compelled to want to chat in, please do. What do we do here on Trending Thursday? Well, it is a live stream that we do for the purposes of seeing what's in the news. What's in the news by way of stocks, what stocks are making headline stories and why they are. We utilize the VectorVest software to help us to corroborate the stories. Are they good stories? Are they not so good stories? And the beautiful thing about the VectorVest software is we provide information behind what's being done as far as the news is concerned. So one thing is the news. That's where you get data, all right? And if you looked at the software recently over the last weekend, we had an excellent essay done by our founder, Dr. Bartolito, which talked about the difference between information and data. We are inundated with data from a lot of people. But what VectorVest provides for you is useful information to help you to make the right decisions. And that's what we do here on Trending Thursdays. We look at stocks that are making the news. We utilize the VectorVest software to help us to make decisions. Real quick, and I see that Tom is here. Joey, Jay, Jesse, I heard a rumor that Glenn has risen. Is it true? Yes, I am here, Tom. I am back. I was, just so that you know, I was ill. I was in the hospital for the last 3 days. So what a way to turn over the new year. It's all right, though. Everything is good. I'm good to go. And we're just going to keep on rocking. So good afternoon, Roy. Good to see that you're here, all you guys that are here. Man, my hands look horrible. So thank you for telling me my hands look horrible, Joey. Wow. So I had to put some lotion on them. They were kind of bad. All right, but Happy New Year again. Rusty is here. Good afternoon, Rusty. Glad to see that you're here as well. So glad, and Roy is here. Glad to see the people who are typing in. By all means, please type in as well. And you also know that when we do these presentations, I love to have fun, so we're going to have some fun. I thought it fitting this year, or for the first presentation of Trending Thursday this year, we're going to look at some of the best stocks from 2019 and some of the worst stocks from 2019. And, you know, those could be some stocks, of course, from the bad stocks to stay away from going into 2020. And some of the best stocks for 2019, let's go see if they're still good, excuse me, as possibility of stocks to look at going into 2020. So we're going to always take a look at what's going on in the market, what things are moving the market or the economy as a whole. The economy and the market actually are two different things. The economy, you know, primarily is the Fed's job, looking at jobs, looking at interest rates, okay? We still know that we're at historically low interest rates. And the market does get affected by what's going on in the economy a lot. But that's not what the market's all about. The market is all about money goes where money grows. So when interest rates are as low as they are right now, money is not going into the banks. Money is going into the market because they're going to make more money in the market than they will putting their money in the banks trying to get in interest rates. So money goes where money grows, and money is still, because the interest rates are still in the market. But from that perspective, there's a lot of money in the market. A lot of stocks are overvalued because there's so much money in the market. How do you sift through to know what stocks really are good and what stocks really are not good? So this is what we do on Trending Thursdays. We look at what stocks are making headline news. And from there, you can take that information and decide whether it's a stock that you still want to be in or not if you haven't already been in it. And some of the stories that we have show bad things about stocks, and we can steer you away from that. So that's what we're all about. And we are going to look at some of the best stocks for 2019, some of the worst stocks of 2019, and then we're going to also give you an opportunity to look at your stocks as well. How many people in the room, interesting to know, how many people in the room are not VectorVest subscribers? I'm asking that for a reason. Type a me in the room? How many people are not VectorVest subscribers? And since we've been talking, Brett is in here. Happy New Year to you. Rudnick is in the room, good, from Switzerland. Outstanding. Kev is here. Happy New Year, happy new decade to you as well. Roy is new. I'm trying to see how many people, Robert's here, I'm trying to see how many people in the room are new because I'm going to show you something. Jay, you're not new. Why are you even typing that in the room, Jay? OMG. OMG. So it looks like right now, according to the amount of people that are here, that it's only one person in the room that's new. And if that's the case, a couple of things. One, I want you guys to remember, especially if you are new, don't forget to like, comment, and subscribe. All right, that's the first thing I want you to do. All right, thank you, Kev. Thank you, Kev. I want you to like, comment, and subscribe, and I really want you guys to comment. These videos that Joey puts out that go up on YouTube, go to those videos. Look at the videos. Tell me what you like. Tell me if you like the videos. Tell me if you like the presentations. Tell me if you don't like the presentations. But I'd like to hear from you is this stuff useful to you? If it is, let me know. If there's things that you'd like to see, let me know. All right, so don't forget to comment. That's huge. I really want you guys to comment on these videos. All right, and of course, subscribe to the channel so that you'll be updated on any new material that goes up on our YouTube channel. So again, it only seems like one person is brand new. Oh no, Brian is brand new. Excellent, from the UK. So you know what we're going to talk about. Ooh, my mic just fell off, Joey. I wonder if it sounds like. Why you look at me like that?
I trusted you to put it on.
I put it on. It just fell off. All right. This is on. Does it look good? Do you care? Right now, Joey's mad at me. He'll get over it. Arson is here. Arson says, I gotta move that. What do you think about PG? Arson, hold off towards the end. Hold off towards the end. I will give you guys about 15, 20 minutes of looking at the stocks that you want me to look at. So we will do that. So especially for anybody who's new, I will take care of that. How are you going to night off for 99-cent special? What are you talking about, Jay? Oh my gosh, I need to stop listening to Jay. Hey, Jesse, did you get into... Jay, hold on. Let people listen to what's going on. Oh, tell Jay to stop.
You mute him?
No, don't mute him. Just don't kick him. Jay, stop for a second. Oh my gosh, he's just typing on into everything. All right, so... with all of that being said, I will give you an opportunity to look at your own individual stocks. We're going to take a look at them. But what we always start off with is what's going on in the market. So I'm going to start off with opening up the home page of the VectorVest software, looking at our home page. Going into 2020, and you're going to hear a lot of this going on for the rest of the year. This is the year for good vision, right? 2020, you've already heard that. Hindsight is always 2020, or 2020 is perfect vision. I think that our goal for this year is to set you guys vision on being better investors in the market. And these Trending Thursdays are going to play a role in that, but everything that we do in VectorVest is already leaning towards that way, to always make you a better investor. But I think just because the year 2020, we need to put more emphasis on you guys having better vision in this upcoming year to help you to make money. And the more you do that, the better off you're going to be as well. So just keep that in mind. So Kev is talking to Jay. Arson, all right, so they're going back and forth. I'm just keeping my eye on the chat to see if anything is coming towards me or you guys are talking. And thank you for that. Who said that? That was Robert. Robert says, love your presentations, always on the mark. Thank you very much. I appreciate that. But it's, you know, I want to make this social media platform grow as big as it can, and that's going to come from you guys. Why'd you do that? Wow. All right. So, keeping on board with that, let's get into what's going on in the market. First off, we can see that all of the major indices are up today. All right. The Dow, the NASDAQ, the S&P 5 and 100, and our VectorVest composite. all up today. The market is up. The Dow is up 181 points. Good up day in the market. Market is still hitting historically new highs coming off in 2019. Looks like going into 2020, we are still on pace to keep rising higher. But always remember, just like the blood, sweat, and tears song, what goes up must come down. It's absolutely right. So all I'm saying is it's great to take advantage of what's going on in the market, but don't lose sight of the reality that at some point in time the market's going to come down. And let's move over to our color guard. And from the color guard, you have a heads-up indicator called the MTI, the Market Timing Indicator. This indicator is cast on a scale between 0 and 2. But when this indicator gets to the range of about 1.5 to 1.6 on that 0 to 2 scale, the market is at a point where it's looking toppy. Now, how do you know when a market tops? Well, you know when a market tops when it stops going up and it starts going down. This heads-up indicator, only found in the VectorVest software, at least let you know that we are at a level where the market is looking toppy. We're going to take a look at a market timing graph in a second. But as you look at this information, our color guard is our traffic light into the market. We track 3 indicators on this color guard. Price, which is the price movement of the VectorVest composite. The VectorVest composite is an indexed arithmetic average of all of the stocks that we track, and currently we track 8,268 stocks. So the price of the composite, or the VVC, tracks the movement of almost 8,300 stocks. RT is another indicator tracked in the color guard. RT is one of our core proprietary indicators, also cast on that scale between 0 and 2. RT looks at the short-term price trend of the market. This indicator lets me know if the market is in an uptrend or not. It currently is above the value of 1, so not only is the market hitting new highs, going out of 2019 into 2020, but it's a good uptrend in the market. That's a good thing. The BSR, or buy-to-sell ratio. If you look, every stock in our database gets a buy, a sell, or a hold recommendation every day. The BSR, or buy-to-sell ratio, looks at the relationship of buy recommendations divided by sells. We can clearly see that we have 2,150 buy recommendations in the software and only 917 sell recommendations in the software. This right here is telling me that the market is showing signs of strength. More buy recommendations in the software means more stocks are moving higher, getting buy recommendations in the current rally. That is an indicator of strength or weakness in the market. And we look at these indicators on both the week-over-week and day-over-day basis to assign colors to these tiles. There's 18 boxes here looking at the last 6 trading days. Currently, we have 3, 5, 6, 7, 8 green, which means that I've got 8 green. Oh, if I got 8 greens, that means I got 8. Oh, that's wrong. 3, 6, 7, 8, 9, 10. So I've got 10 yellows. I said that. It's 18. Why? If I got 8, that means duh. I don't know why you didn't figure that out, Joey. Wow. All right. Means I have more. You have to take your calculator out. It was 10. We got 10 yellow lights and 8 green lights. The market is saying, going along with this MTI at that level of 1.5, the market right now is saying, just be careful. Don't be afraid to take advantage of the up days as they happen, right? Don't be afraid to take advantage of the up days as they happen. But with more yellow lights than green lights, this is a time to just be careful. Don't be afraid to take some profits off the table as well. We are at a level where the market is starting to look for a top. Just be careful. Tighten stops. Don't be afraid to do that as well. All right, so as we look at these indicators, let's go over to the market timing graph real quick. There it is. Let's go look at the market timing graph. Did I put on the wrong one?
Yeah, 1 second.
Joey messed it up. No, it's not supposed to be. It's supposed to be on the other side. I'm going to drink out of my mission cup today. Even though they lost the citrus bowl. Horrible. There we go. Joey got it fixed. Can they see the right thing now?
Yeah.
All right.
I just wanted to fix it up before we go.
Well, thank you. You should have let me know what was going on instead of just clandestinely. My Michigan cup, not my Duke cup. There's my Duke cup. All right, but today I'm drinking the coffee out of my Michigan cup. Go blue. Go blue. There you go. What you know about go blue? You don't know nothing about Michigan. All right. So here's the VectorVest composite on the market timing graph, now shown in candles over the last year. Let's go move this into a 3-month graph. And remember I talked to you about that MTI? Here's that MTI now shown on the graph. Notice that when the MTI, let's go put this back on the 6-month graph, put it on a 1-year graph. Notice that when the MTI gets to that level of about 1.5 to 1.6, let me go find you a line here, 1.5. There we go. Let's make that a little darker so that you can see it. And this is that information. This is that good heads up. How about when the market gets to that level, market's moving up, there's that MTI above that value of 1.5. What did the market do? Pull back. Again, still above that level. What did the market do? Pull back. Still above that level. What did the market do? And a little bit less of a pullback. But I also want to show you something else. All right, I'm going to draw a freehand line. I want you to see something. See as the market is going up here? Okay, if I draw connecting the lows, market's in an uptrend. I want to show you something. What was the MTI doing? That indicator that tells you the underlying trend of the market. Let me draw this line a little darker. This is stuff that you look for having the VectorVest software. Look at that upward move in the market where the MTI is falling. Look at that. This is what I mean by, as a VectorVest subscriber, things like this should never blindside you. Things like this should never blindside you. All right? Right now, we're at the level where the market is looking for a top again. All right? This is why I say, if nothing else, folks, just be careful. Tighten stops on the stocks that you own. We put this on a 3-month graph. Market's still in an uptrend. Gotta love that. We got a little bit of indecision going on today with the market at that level of looking for a top. A little bit of sideways move as well. This is a time we saw on that homepage, a time to just be careful. That information that you get on the homepage is outstanding, bar none, worth every penny that you would pay for the VectorVest software. That by itself. But I can see the yellow lights popping up, more yellow lights than green, telling me to be careful. The VectorVest composite by way of the candlesticks are telling me the market's moving a little bit sideways. All of that backs up together. So now it's not that you hear me saying it. The software is pointing you to the direction of just be careful right now. Don't be afraid to take advantage of an update. Don't be afraid to take advantage of stocks that are going up, but do it cautiously. Does everybody in the room understand? Can I have my chat back, please? Does everybody in the room understand that? If you do, please type a yes in the room, because this is important stuff. This is the information that you need to make the right decisions, but I want to make sure that everybody in the room gets an understanding of what's going on. Please do type. There you go. Please type it, because this is where the rubber meets the road. This is where you make the decision to either make money or you get caught out and you lose money. So a lot of the yeses are coming through. That's exactly what I'm looking for. All right. So given all of that, let's talk about why the market is doing what it's doing. Let's go to our first story today. I didn't set my stories up right, but that's all right. That's all Joey's fault. Let's go start. Let me go find my first story. My first story is going to be about what's making the market look the way that it is. All right? What's making the market look the way that it is? There's two things that are moving the market right now. What are the two things that are moving the market? We talk about it every Trending Thursday. Interest rates and the deal with China. Interest rates and the deal with China. As long as interest rates stay low, people are happy. But the lower the interest rates, it's good for the economy. It's good for the economy until we get to a point where inflation becomes an issue. Once inflation becomes an issue, because prices start to rise, then we start to raise the interest rates. And when we do that, we start to stymie a bull economy, or a bull economy. Right now, we're still in a bullish economy. And the tariffs between us and China could hurt the market. So my first story is how tariffs hurt us, a new report from the Fed. So in looking at that, Fed economists are out with a new empirical study measuring the impacts of the 2018 tariffs. An industry's exposure to tariffs was associated with lower employment and higher producer prices. They found no statistically significant relationship to domestic industrial output, and this study only measures the short-term effects of tariffs and only 2018 tranches. Interesting as you look at what the tariffs are or are not doing for us. Well, if we build goods or we raise taxes on goods coming into us from China, that hurts our ability or hurts their ability to do business with us and vice versa. So it can stymie either economy or both economies at the same time. And I like that. Job says what's moving the market now is PR, public relations. Partly yes, but I'm still going to stick to, in case you didn't know, there's three things that move markets globally: earnings, interest, and inflation. Those are the three things that move markets no matter what area of the world you are. So globally, those are the three things that move markets. Earnings is the good guys. We still had historically good earnings on stocks for all 4 quarters of last year. All right. Well, we're not going to know about fourth quarter for 2019 until the next earnings. Well, we're getting ready to pop off into new earnings shortly. All right. Earnings are going to be coming out. So we're going to be talking about earnings for the last quarter, quarter 4 of 2019. But earnings still have been beating. Estimates have been beating, and that's good for a bull market. Interest and inflation are the bad guys, though. The Goldilocks scenario is to have rising earnings but falling interest and falling inflation. Right now, interest is still at historically lows. In inflation, even though the Fed says that it's still in check, we can still see that right now prices are starting to rise. It is, but the Fed still says that right now it's well within the range of what they're looking to accomplish. And until inflation gets to be a bad thing and prices really start to get exorbitantly high, we're going to keep interest rates hopefully at where they are. I think that they right now have stopped considering lowering interest rates because we still have a great economy. There's no reason to raise interest rates. There's no reason to even lower them anymore, in my humble opinion. In my humble opinion, I don't think we need to anymore. But there's been talk about lowering all the way down to zero or even going to negative interest rates. And I never thought that within my time on this planet that I would ever hear any person ever say that we should get to a point of negative interest rates. All right, so there we go. Everyone, please remember to hit the like button. Oh, that's right. Look at that. Tom is in there in the back doing some stuff. Thank you, Saborium. Saborium says, welcome back. I appreciate that. I read on Yahoo this morning that the market is news-driven today due to China doing something to help their economy. And I do know, Robert, that phase 1 of the tariff deal with China is about to happen really soon. I think that the president is planning a trip to go to Beijing so that they can sign phase 1 of the agreement, and we'll see how that works out. All right, so looking at that story about how tariffs are affecting the market, along with, jobless claims. Jobless claims dipped to 222 to the end of 2019, back near half-century lows. People are working, folks. That's great for the economy. All right, that's great for the economy. And unemployment is at historically low lows. And that's great for the economy. So you look at those two things, talking about the tariffs and how that could affect the market or the economy adversely. And the other side of it, jobs are doing, if people are working, that's really good for the economy. So now let's go back to my graph that looks at the market timing graph. We'll do that. And we're going to look at another graph. Something else that you guys probably look at would be the spiders. I'm going to do it a different way than I planned. But look at that. Even the spiders, the S&P 500, right along, put this on a 3-month graph. The VectorVest composite is moving up nicely. Look at that. The S&P 500 moving up nicely, hitting new highs today. Going back to the VectorVest composite, we're coming off historical new highs from about 3 days ago. So overall, the market is looking bullish, folks. So there's no ifs, ands, or buts about it. The Chinese are under the illusion they have the upper hand on Trump. Paul, two things I won't talk about is religion and politics. I know that it's hard not to talk about politics, but and even if they feel that they have the upper hand or don't have the upper hand, you know what's important? The results. Do we get the tariffs pulled away? Because that's going to hurt us and them. That's the overall goal. So, Paul, as long as whatever is happening, if the tariffs get off the table, that's going to help us and it's going to help them, and everybody will be it'll be like, we all, what is it? We all live in the yellow submarine. The yellow, it's something like that. Or we can all hold hands as a global economy and go, Kumbaya, my Lord. We can all hold hands around a big campfire, a big global campfire, and sing. All right, that's what it's all about. We want the relations to be a good thing. Paul is right. We are the world. We are the children. We are the ones who make a brighter day, so let's start living. All right, but everything right now from a market standpoint, whether it's our VectorVest composite or, hold on, Henry, that's a good, and hold off on that because that's a good question. Should energy be the next up? We'll talk about that. We will definitely talk about that. All right, so from a market perspective, that's what's going on. Unemployment's nice and low. The tariffs could be coming off the table. The Fed is still right now considering just leaving the interest rates where they are. If all of these things can stay in place the way they are, I think we're going to start off 2020 with a good bang. But just keep in mind, looking at that MTI, looking at the VectorVest composite, which tracks over 8,200 stocks, just be careful. Don't get blindsided by all of the news. All right, don't get blindsided. A lot more up days than down days. Definitely, I can see, and this is over the last 3 months. We are retracing off a high. All I'm telling you is don't get cocky. All right, don't get cocky and don't be afraid to tighten stops on stocks. Today is a day of indecision. We got a little bit of doji forming on today's activity. So the market is at that level of the high. All right, let me minimize this and let's go to my next story. And this is pretty much what we're going to talk about today. All right, on Seeking Alpha, the 2019 leaders and laggards. So I've got a listing of the stocks that were the leader within the Dow, the S&P, and the NASDAQ for 2019, and the laggards that were the ones that were falling behind for the year of 2019 from the Dow, the S&P, and the NASDAQ. So all of the stocks that you see here, whether they're on the bullish side or on the bearish side, have been put into VectorVest watch list. Can you comment on the market climate graph? I can do that real quick. I wasn't anticipating doing that, but I can do that real quick. The market climate graph is not designed for you to trade off of. The market climate graph is designed for a 30,000 foot view of the market. So if I'm going to click on add new, I'll change to the market climate graph, put this on to a 1 year, and we're looking at two things. We're looking at the S&P earnings, which is the fuchsia line. All right, over the last year, the earnings on the S&P 500 stocks rising, and as long as you have rising earnings, we will be in a bull market, bar none. But if you look down below, change the style, let's make this a little darker. We have the S&P earnings VV. So we take the number, right now the S&P earnings is at $7.07. The average stock in the S&P 500 is earning $7.70 on an average, all right, on average. But we take that data and we put it on the VectorVest scale, and we can see that on a VectorVest level, we're falling. But remember, on that VectorVest level, it's on a scale between 0 and 2. Notice that the S&P earnings VV is still above the value of 1. They can't see that. I need them to see the side.
Go to bar too full.
Well,
One over.
there we go. And if you look at the S&P earnings VV on that scale between 0 and 2, earnings is still above the value of 1. So even though earnings are rising, the S&P earnings VV on that scale between 0 and 2 is actually starting to fall. But as long as it's above the value of 1, we're still in a bull market nonetheless. Now, when that S&P earnings VV falls below the value of 1, That's when we're going to know we're in a bear market. All right, so there you go. Can we see the watch list of VectorVest seeking? Yeah, I'm gonna get to that in a second. I wanted to answer B. Rudnick's question about looking at the market climate graph. This is the behind-the-scenes 30,000-foot view of what's going on in the market. Earnings as a whole are still rising, but our VectorVest indicator, the S&P earnings VV, is falling, but still above the value of 1, so we're still okay. Right now, bearish correction. At any point in time, I will never call it a correction until it is a correction, Richard. What is a correction? When the market falls off by about 20%, something along those lines, that's a correction. You won't know that until it happens, but what I want you to understand by you looking at the VectorVest software, if I'm looking at the VectorVest software, looking at the market timing graph, I'll be able to see that before it happens. Knowing that we're at a level where the market is looking for a top, what am I looking for? Well, when the market stops going up and starts going down, that's when the top happens. So, Richard, that's what I'm more in tune with, and I won't know if it's a bearish pullback or a correction until it happens. But even during that time when the market does pull back, this is your time to watch what's going on and take action, the appropriate action. Joff says close to a bottom, but still in the top half, so bottom of the top. I'm not going to call this close to a bottom yet. We're close to a top, but not close to a bottom. All right, let me go to that listing of the stocks that we put together for you. We're going to start with the leaders. All right, so all of those stocks that were in the Seeking Alpha, these were some of the leaders. I put a couple of extra stocks in here as well. We already talked about the VVC and the spiders. All right, so out of 18 stocks, here's 16 of some of the best stocks for 2019. All right, first thing, what I noticed, the majority of these stocks are buy recommendations. That's important to know. All right, every stock in our database gets a buy, sell, or hold recommendation. The stocks that were the leaders for the year are between buy and hold. Out of the 16 or so, majority of them are buy recommendations. That's a good thing. Stocks that you know about, AMD, JP Morgan, Tesla. Tesla's up there with a buy recommendation. Microsoft, Chipotle, Visa, Apple, United Technology. So here's some of the best stocks. And what I automatically can see, looking at the power of the VectorVest software, the stocks are, for the most part, recommendations buy. Another thing, we know that RT is an indicator that tells me if a stock is in an uptrend or not. Notice that every stock in here has an RT greater than 1. All of the stocks that were in the list for leaders are all moving up. Some moving up more than others. If I want to sort this list by RT, the fastest moving stock in this list, AMD, followed by ARWR. How many of you know what ARWR is? All right, how about this, especially for my new people? Watch this. If you right-click on the stock and go down to View Full Stock Analysis Report, look at that. I can find out everything I need to know about AWR or ARWR. It is a drug biomedical / genetic. I'll get a 3-month graph of it, along as with an industry graph. Look at the industry. Industry is a strong industry. That drug biomedical genetic industry over the last 3 months is rocking and rolling. Pulling back now over the past few days, and the stock has been moving sideways. Scrolling down, I can show you what all of our indicators within the software are. And look at that, all the way down. So as a brand new subscriber to this software, or not even a subscriber to this software, I'm going to show you something else. All right? If you are not a subscriber to the software, we got a link here called Free Stock Analysis. And,
I'm gonna put it in the room.
all right, Joey put a link in there for you, especially if you're not a subscriber. You like what you see here, that's great. But now let's put some of the power behind the software into your hands, even though you're not a subscriber yet. So Joey put a link in there. For those of you who are not subscribers, click on that link. And if you want to get any stock analyzed, any of the stocks that we track, simply type in the symbol. Let's say, give me a stock, Joey.
Apple?
And I already know. Give me another stock. Never mind.
Costco?
Costco, C-S-C-O. That's Cisco. Oh, Costco is C-O-S-T. All right, so you type it in. All right, you put in your email address and then click on Get Report. All right, and that's specifically for the people in the room in this live stream who are not subscribers to this software. You can get your stocks analyzed for you for free. For free. So Joey put the link in there. I wanted to show you what it looks like, and you can analyze. You put your email, click on Get Report, automatically, boom, it emails you the report. So take a look at that. Why the MTI was not high in 1.5 if the last 3 months was constant rise. I understand the question. So right now, if you go back to the market timing graph, we're going to do that real quick. Let's go market timing graph. So the market's moving up. The MTI is moving up. And your question is, why MTI was not high in the 1.5 if the last 3 months was constant rise? Well, look at it. As the market is rising, that MTI is rising as well, Arson. Do you see that? Rising market, rising MTI. That's exactly how you know the market is getting toppy. So hopefully that answers your question. Other than that, I'm not sure what else you're asking. The MTI slowly but surely has gotten to that range of being toppy. Even though the market's risen here, the market wasn't getting toppy. And guess what? The market kept rising. Now as the market is getting toppy at that value of 1.5, what's the market doing? It's slowing down that upward move. All right, slowing down that upward move. All right, a correction a lot like being shot. You might live through it, but you don't want to until after it's over. I don't want to get shot. Why are you talking about getting shot? You want to get shot? I don't want to get shot. Man, that's so morose. Oy. All right, so you're welcome, Arson. Let's go back to, was it here? There we go. So the first thing, again, all I'm looking at is the stocks that are in this list. I'm looking at the recommendations. I'm looking at the earnings growth rate. Only few of them have negative earnings growth rates. Watch those stocks that have negative earnings growth rates. You want to be in a stock where the earnings growth rate is preferably in double digits like we have here. Look at that, Advanced Micro, buy recommendation, growing their earnings at a rate of 28% a year. How about Tesla? Wow. Growing their earnings at a rate of about 37% a year. Or coming down to Netflix, growing their earnings at 29% a year. Or Chipotle, growing their earnings at 23% a year. Building a watch list of stocks is exactly what you want to have happen. All right, this is why I'm very quickly looking at the stocks that are the leaders and what they look like. Look at that. All of them are T's above 1. The majority of them have relative safeties above 1. So the safest stock in here is Visa. Chipotle is the second. Disney. How about Disney? How about Disney, Apple, Netflix in the streaming wars this year? Big move on these stocks by way of stream. Disney came out with their new streaming. Holy smokes, they're getting... How many of you watched The Mandalorian? Joey and I watched The Mandalorian, but Disney's kicking in. But we all know who the big boy is still, Netflix. Netflix is still the big boy, and Apple and Disney and everybody's coming after Netflix. They've got the most subscribers. But Disney, I think, is gonna bite into that. Why? Because not only do they have the streaming service, but they got Star Wars. They got Pixar. They got Marvel. They've got a vault full of movies that people love. Netflix needs to keep their eye on Disney. And I love Baby Yoda too. Jay, we know Glenn gonna brag on that Apple. You know I am. You know I am. Still, how about Apple is hitting all-time highs? Let's take a look at all three of these stocks real quick. Let's view the stock graph. So three of the leaders in the list. Now watch this. Interesting. Disney was one of the leaders, right? Look at the earnings per share. This is that information. You know why the earnings per share is falling? Can anybody tell me why the earnings per share was falling? Where were they putting their money? Where were they putting their money as time was going into the year? Anybody want to venture an answer? Where was their money going? All right, so the earnings per share was falling. Anybody want to put that out there with investing? Investing in what, Jay? And that's absolutely right, investing in streaming. So you know something, as the streaming starts to take off, what do you think is going to happen to the earnings per share? That's right, arts and content development. What do you think is going to, Disney's a name that's been around forever. So this was investing into the streaming service. What do you think earnings per share is going to start to go do? We'll keep our eyes on that, all right? Like I said, Netflix better watch Disney. I'm calling that. Netflix better watch Disney as far as the stream wars is concerned. Apple, historically new highs. Love me some Apple and always have loved Apple. Spending money on streamers and buying market share, right on it. So you guys know what was going on with Disney. Apple took a hit in earnings. What is it starting to do? Apple streaming is not bad either, and they're going after Netflix, but Apple hitting historical new highs going into 2020. And last but not least, look at Netflix. Man, now Netflix looks all wishy-washy, but what's the earnings per share doing? They're making money. They're making money left and right, hand over fist, because they are the leaders right now still in the stream. They are the leaders right now, all right? Agreed. VectorVest has a wealth of tools and great support from Glenn and others. There you go. Joey, put Glenn in time. What are you putting me in timeout for? What did I do? Dang, putting me in the timeout. Saborium says Disney can also raise the price of park admission and parking. You know, that's another thing about the Disney. Watch Disney, because Disney is not only in the streaming, is just a small part of their business. They still have the theme parks and all that. You're right. So Jess, Glenn needs some makeup. What are they talking about? Wow, I'm getting beat up today like nobody's business. Good Gordon Gin. All right, so those are three of the biggest movers, but you can see what's going on with Netflix. What's helping them is their subscriber base and Netflix and chill. You ever do Netflix and chill? What you laughing for?
No comment.
No comment, so you do that Netflix and chill too. Uh-huh. Yeah, I do Netflix and chill, but I got a wife, so I Netflix and chill at home with my wife. All right, let me close out of those stocks. Why did you laugh, Joey? So I want to show you something. Let's flip this real quick. So you see this list of some of the leaders, right? Look at the laggards. I'm going to let the watch list talk for itself. Watch this. There's the laggards. All right, as you look at this, look at the types of stocks. Look at the recommendations. What's the first thing you see? A lot of holds. You got now a couple of sells, only one buy. Only one buy in that whole list of the laggards. These were the stocks across the Dow, the S&P, and the NASDAQ that were the laggards for the year. These are the stocks that, if you do own, keep your eyes on them. I'm going to show you something else. Let's use the power of the software and the indicators. Remember that indicator that looks to see if the stock's in an uptrend or not? How about almost half the stocks have an RT below 1? These stocks that you're looking at right here, Boeing, Expedia, Macerix, TripAdvisor, Biomed, Fossil, are all in downtrends. Not only are they in downtrends, a couple of them are sell recommendations. Holy smokes. So we're looking at some of the stocks that were the best. Now we're looking at some of the stocks that were the worst. And why were they the worst? Look at these earnings growth rates. More of them are negative earnings growth rates. Now, there is a company here, Expedia, has an earnings growth rate of 21% a year. How about we also have TripAdvisor, 23% per year. But these stocks right now are, the safety of the stock is not there. The stock's in a downtrend. The stock does have good upside potential. But you know something? There's a bad time to be in a stock that you want to hold long term. Long term, I'd like to hold TripAdvisor. But the safety telling me that the stock most likely is going to miss earnings. The timing tells me the stock's in a downtrend. The stock has got a sell recommendation. So even though the earnings growth rate is nice, look at the other information that we give you to make a better decision. So somebody on TV can tell you, man, TripAdvisor is a good stock you want to hold long term. Yeah, not yet. The good thing is the stock is undervalued, but it's not a safe stock. It's a more risky stock. The stock is going down in price because RT tells me that the RT is below 1. Stock's going down, and it is a sell recommendation. Well, what about this other stock, Glenn, that's got a 21% earnings growth rate? Expedia.com. All right, stock is undervalued. That's a good thing. Good upside potential. 1.46 on RV. Oh, relative safety is okay because it's above the value of 1. But what's the biggest thing hurting the stock? The stock's in a downtrend right now. Not in a deep downtrend, but it is a downtrend nonetheless. So no matter what anybody tells you on TV, well, the stock is trading this, that, and another thing, and it's a great buy. Well, it's got good upside potential, but not the right time to be in the stock. Does this all make sense to you as well, folks? All right, type a yes in the room. Because I don't care what anybody tells you on TV, this is where you will make or not make money. This is the information behind the software to help you to make the better decisions. Does everybody agree? Yes or no? Yes or no? I'm very interested to know. All right? This is what makes the difference between what somebody on TV, Joey can whisper in my ear and say, hey, Glenn, go buy that stock. I'm going to take this stock that Joey gives me, I'm going to put it into a watch list. And you know, when you can look at the watch list, just look at the laggards, look at the recommendations of the laggards compared to the leaders. How quickly can I discern which stocks really are the best? And you know, that's why the leaders are the leaders and the laggards are the laggards. I don't care what stock you invest in, folks. Put them into a VectorVest watch list. And you know what's going to happen? The software is going to tell you what you need to know. It ain't going to tell you what you want to hear. And you got to get over that. You got to get over that. And if you get pissed off because well, I know that the stock, all right, you know what you know, then go with it. And if you know what you know, then go with it. What I'm trying to help you with a vision this year, remember 2020, that good vision, we want to help you with that vision this year. Put that to the side. Put your ego to the side and say, you know, yeah, I know what that stock, blah, 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 blah. Let the power of the software save you. All right? Let the power of the software save you. You know that women make better investors than men? You know why? Because we're born with egos. And we're afraid. And we don't like to admit when we're wrong. The software is going to tell it to you down and dirty. Whether you want to hear it or not, the software is going to give you the scoop, the skinny on the stock. Let it help you, no matter what stock. So you know what I'm going to do right now? I'm going to flip the script. I want to know what stocks you want me to look at. I'm going to take the time. I want you to know what stocks you want me to look at, and let's go use that information. And actually, I was going to put them into, I'm not. Let's go type some stocks in the room. All right, let's do it. I'm gonna do it right. I'm doing it on the fly. This is on the fly. All right, EMPH, comma, anything else? PG, got you, comma, WMT, comma, not Apple. Wow, Paul is getting on me. He said not Apple. HUI. Someone wanted to look at energy. I'm gonna put in USO. I'm gonna put in USO. What else did I want to put in? Energy. I'm going to put in you guys as well. All right, comma, Lulu, Lulu, comma, W, comma, what is that, Wayfair? I think that was Wayfair. EHTH, comma, SINA, comma, DAVA, comma, UpFi. What is that? UpFi. That sounds like that. Up your fi. I don't know. That was horrible. Double check that UpFi for me. ORBC, comma, CPRT, comma, NEE. I'm going to have to go through these quick if I got to get them all done. Just keep that in mind. The more you give me, the quicker I have to go through them, okay? AMZN, comma, GSX, comma, I love that stock. IMPUI, good stock. Did you really put MOM? Is that really a stock? Comma, MOM. It is. Oh, that's Momo. Are you looking for Momo Dahlia? Hopefully you are. UpFi. Tom, I don't know if we track that. Up UP. Oops. It's oh, please don't tell me I did that good. I don't think we have UPFI. I don't have UpFi. We don't track that. So
PI.
Huh?
UFPI.
UPFI.
He says UFPI.
UFPI. Okay, there it goes. I'm going to take a couple of more. ERX. That's going to be my last one. Let's go peep these out real quick. Put them all on 3-month graphs. All right. Couple of things I want you to know what I'm looking at. I know I got you now, Tom. Tom's yelling at me. OMG, Tom's yelling at me. You were typing it in wrong all that time, Tom. Don't yell at me. Joey yells at me a lot. So I'm going to tell you what we look at on a graph. All right? Real quick. Take off the last close. We look at support and resistance. All right? My support and resistance should be green and red and 2 support lines. How come they're not red? That's interesting. All right, support and resistance, there's one of them. There's one support line. I don't know where my other support line is yet. Somewhere. All right, we look at support resistance. We look at a 3 and 8 exponential moving average. We look at volume, and we look at earnings per share. The whole idea is I want to see a stock that's moving up in price. How about ENPH? Recently broke through, this is in the last 3 months, recently broke over a level of resistance. Love that. Good earnings, good volume. ENPH, not a bad play. Not a bad play right now. Big open candle today. If I'm looking to get into it, how about going about 12 cents higher than the high to make sure that you're buying into a rising stock? But a beautiful up day. How about the earning, the 3 and the 8 crossed? Let's talk about that. The 3 and the 8 crossed back here on 11.25 and it never looked back. That's a beautiful entry right there as the stock based. Look at that. 3 and the 8, even on the pullback or sideways moves, the 3 and the 8 held. Even here, the 3 and the 8 held, nicely running up. I love that. Love that. That's a good stock. All right, real quick, next one. Ooh, Procter & Gamble, a little bit of a channel. Look at the big channel it's in between 125.57, a level of resistance, and 118.63, a level of support. Look at the 3 and the 8 back and forth. How about just a couple of days ago, the 3 and the 8 crossed to the downside? Actually, here, the 3 and the 8 crossed to the downside. If I were in the stock, because the 3 and 8 crossed and went up, 3 and the 8 went bearish, this would be a good opportunity to either take half off the table or take profits. All right, right now the stock has got more continuation of the 3-8, even with the update yesterday. All right, the 3 and the 8 crossed was yesterday. What was yesterday? Yesterday was, Tuesday. Look, with the update on Tuesday, the 3 and 8 was still bearish. Not a good time to be in Procter & Gamble. Love the earnings per share. All right, don't get me wrong. Love the earnings per share, just not the right time to be in Procter & Gamble. Or if you are in it, don't be afraid to take half off the table. Lock in the profit on half this position or take it off the table and wait for another buying opportunity. All right. Is ENPH overbought? You know me. The only way I'm going to tell them not if the stock is overbought by using another parameter, go to technical analysis, let's use stochastics. Stochastics is the only way I'm going to be able to tell if it's overbought, and it is in that overbought territory. But you know why I don't look at that, B. Rudnick? Look at the stock has been in overbought territory for a minute. I always want people to know that. I like support and I like stochastics, but look at that. Just be careful with that. The stock has been in overbought territory since December. Stock's price is still going up. So this is what I mean. If the stock is going up, put in your order and make sure that you have good stops in places in case it reverses. Don't lose more than about 5% on it. All right, does that make sense, B. Rudnick? It's in overbought territory, but it has been for the last month and still moving up. Be careful with that. Don't, here, overbought and then it pulled back. But right now, the stock market is moving up. The stock is moving up. It doesn't matter. Does that make sense? All right, I'm going to take off stochastics. Let's go through these stocks. We did that. Walmart, a little bit of a sideways move. All right, you would think that with the Christmas season, it would have risen. But maybe, you know what probably hurt Walmart? Amazon. All right, but man, look at that. Into the Christmas season, stock was just sideways. Didn't fall, but the stock is sideways. I like Joff's answer. The stock may be overbought. There's no reason not to buy it, especially if the stock's price is going higher. If you get into a stock that you know it's overbought, have tighter stops. That's all you got to do, because I don't want you to miss the boat on taking advantage of the stock moving up. The stock may be overbought, and if that's the case and you know it, by putting something like stochastics or RSI on the stock, put tighter stops on it just in case you're buying at the high. who asked me? That was B. Rudnick. Does that make sense? Don't be afraid to buy a stock that's overbought just as long as you put tight stops on it. All right, let's go to the next one. Huey, gold bugs. Gold is getting gooder. Yes, I said gooder. The 3 and the 8 look good on no volume, no earnings per share because it's an ETF. May not be at a bad time, but watch right now. A little bit of indecision today, coming off of a high from yesterday, even though it was a down day. Just be careful with it. I do like overall the upward trend. on the stock from low. Let's put that up there. I do like that. All right, but oops, notice how far away from that trend line it is. What I would probably do if I'm in gold and I like it, I would probably use the 8-day exponential moving average as a way to get out. As soon as gold or the HUI breaks below it, that's probably a good time to be out of gold. Whoever asked me about the Huey, hopefully that makes sense. All right, whoever put in the Huey, let me know, does that make sense? All right, does that make sense? Oil, energy sector. Remember someone asked me about that? Look at that. There's oil. What's it doing right now? Pulling back. The 3 and the 8 is still in play. But watch it. It's starting to pull back. Look at the negative volume coming in. So not only are people getting rid of it, it's picking up in volume. Be careful. Oh, no. Did that just happen? Be careful with oil. All right. It was moving up, but just watch that. That's all I'm saying. Just be careful. Because not only is it going down, volume is conviction. People are selling it. People are selling it. Just be careful with that. I sold half my ENPH position because RSI says it was overbought. I tightened my stops. There you go. Nothing wrong with that. That's a good way to trade ENPH, especially if you know the stock is overbought. Now, the other side of the energy sector, gas, it's going down, down, down. I'm going to sing the song. Down, 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 down. Don't be doobie down. Whoa, 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 whoa. And gas is going down. So I'm looking at both the oil side and the gas side for the person who asked me about energy. All right, so just be careful with gas. And gas has got those days. Some days it's up and then it falls and it's up and it's falling. Just be careful with gas. And it just split recently. Look at that. It just split recently. All right, so just be careful with gas. I got gas. That wasn't funny, Joey?
No, I have to sit in here with you.
Wow. All right, Lululemon. Also during the Christmas season, nice little bump up, trading right close to highs. If you're not in it, wait until it goes 12 cents higher than that high. Make sure you're buying into a rising stock. If you are in it, interesting, did you hold it through this pullback where the 3 and the 8 crossed? Whoever gave me Lululemon, did you hold it during this pullback here? Yes or no? All right, just type it in the room. That was a gutsy move because you didn't know if it was going to continue moving lower than that. All right, that was a good opportunity to get out, take your profit, especially if you made money here. Wait for another buying opportunity, which would have been right here. All right, which would have been right here. Paul said he did hold it. Look at that. And then, that paid off. But be careful with that, Paul, because sometimes that happens and it don't hold and it don't go through. All right, so just be careful with that. You had options. There you go. That's a good way to offset the stock's pullback. Beautiful. Now, the 3 and the 8 cross stocks moving up. 12 cents higher than that high. All right, the stock needs to come back to that high, 12 cents higher than that high before you buy it. Love the earnings per share. Volume, it's lightly traded. Just watch that. Wayfair, woo! Who gave me Wayfair? Type of me in the room. Interesting. And if you typed in Wayfair, do you own it? All right, whoever typed in Wayfair, do you own it? Be careful. What I don't like about it, earnings is the engine that drives the stock's price higher, right? Look at the earnings per share. All right, the stock's price is starting to move up. I totally understand that. All right, yes on Lulu. No, I'm not talking about Lulu right now, Gary. Talking about Wayfair. And Don says, no, you don't own it. Good. I'm not sure I like it just quite yet. Well, let me back up. It's not what I like. I do like that the stock found a level of support, bounced off of that level of support, coming off of that level of support. Look at that trend line. The stock is trending higher. That may not be a bad play. All right, let me make that a little darker. Look at that trend line from the low. I do like that. The 3 and the 8 are positive right now. If you wanted to get into it, all right, let's talk about that. 12 cents higher than the high. I do have a level of resistance right here. Let me back this up a little bit. If I decide to jump in Wayfair, it's at 92.93. I've got a level of resistance at 100 bucks. You know what I could do? I could make about $8 on this trade right here. If like the uptrending, I don't like the earnings though. So for me, this is not a longer term hold play. This is a trade play based off of price action. What I would use if I got into this stock, trying to get, this is my profit target sitting at 100.06. Does that make sense, Don? That is my level of profit target, number one. Number two, if the stock decides to pull back down, this is where I would get out. If it breaks through that level of support on that trend line, that's my get out point. So Don, does that make sense to you? Or anybody who's interested in Wayfair, does that make sense? I like the price action. I do not like the earnings. Volume is This would be more of a technical play up to that level of resistance. All right, that's exactly what, and then I'd probably dump it. But if it pulls back, there's my stop, my line in the sand is that trend line. All right, let's go to the next one. EHTH, love the earnings per share. Volume is good. What's the stock doing right now? It's at a level of moving sideways. It was moving up. Love the entry on the 3.8. This is why we love the 3.8, whether it's a short-term trade, a swing trade, or even a position trade. The 3.8 does a really good job of depicting a good trend on the stock. How about 10.18? The 3.8 cross, rising earnings, rising volume, beautiful entry. Stayed in, even on the days where the stock pulled back, the 3.8 held, beautiful, beautiful, beautiful. What's the stock doing right now? If I'm not in the stock, keep your powder dry. Why? Because it's at a level of resistance right now. Let's see if it can break out of this level of resistance. If it does, right now it's at 97.99. I have a resistance level of 111. I got some opportunity to make money on it, but let this stock get out of its own way first. Right now, it's created a level of resistance right about here. Look at that. It's created its own level of resistance. All right, let it break through that level of resistance. Once it does, I've got a profit target sitting at about 111. All right, I got a nice little profit target sitting at 111. Would you explain the 3 and the 8? Michael, I'm using a 3 and 8 exponential moving average. It's a great way, and to add those, you would right-click on price to add the moving average. I'm using exponential moving averages because it's right in the middle between a simple and a weighted. A weighted tracks price a little closer than exponential. Exponential tracks price a little closer than simple. Exponential is nicely right in the middle. The 3 and the 8, for the most part, is just trial and error. Those moving averages work a lot. Try it. All I say is going forward, just try it on any stock that you look at. All right, but EHTH, a little bit of a sideways move at resistance. Let's see if it can go 12 cents higher than this level of resistance at 97.79. Once it does that, you've got a nice profit target up to about 111. Good opportunity. Love the earnings per share. All right, let's go to the next stock real quick. I don't like this wishy-washiness. This is more of a trade. All right, earnings per share. Look at that, falling. I'd rather be in a stock that's got rising earnings. Earnings is the engine that drives the stock's price higher. Good update today. Love that. All right, just because it's a good update doesn't mean it's the right time to buy. All right, the stock has been between a hold and a sell for the majority of the year. And this is a 5-month graph. Nice upward move today. And where is it stopping? Right at a nice level of resistance. It's done what it's done. This is probably news driven. This is probably news driven. Next stock, Dava. Love the earnings per share. Good earnings per share. Stock was a little bit sideways, bouncing off of this level of support, sitting at about 44.04. Nice update today. The 3 and 8 are about to cross. I do like that. Nice update. Good volume on this update as well. I would really like to see the stock break above the high to ensure that I'm still buying into a rising stock. Uptrend. Uptrending stock means higher lows and higher highs. Right now, coming off of this level, we're not hitting higher highs yet. Really would like to see us take out that high before I jump on board, but a lot of sideways move right now, but do love the earnings per share. Next stock, I'm not feeling this at all. The graph is telling you all you need to know. All right, the graph is, who gave me this? And hopefully if you gave me this, hopefully you're not trading it. And if you are trading it, hopefully you're trading it to the downside. Bob, I can't add another stock because I'm over my time already. I want to get through this list of stocks. So I do this every week. Make sure you have your stocks ready every week when we go through this, okay? I can't add another stock today, and I apologize. But ORBC, over the last 5 months, definitely trending down, a little bit of a sideways move. I'm not ready to pull the trigger on this yet. And the earnings per share is definitely in negative territory. Wow, Joey, really? All right. CPRT, love the stock moving up, hitting a new high over the last 5 months right now. Rising earnings, rising volume, may not be a bad play. I would put my order in 12 cents higher than the high. Next one, knee. Was moving up nicely. Big down day today. The 3 and the 8 are about to cross to the downside. If you own knee, this may be a good time to either tighten stops or take half off the table. All right, big down day. Love the earnings per share. That's great. But price action is moving down. Big down day. Watch the 3 and the 8. It does a good job getting you in and does a good job getting you out. All right, so just keep that in mind. Let's go to the next stock. Woo, apps. This was a good stock throughout the year. Let's put this on a 1-year graph. This stock was had a great opportunity this year, and then afterwards it started going a little bit of wicky-washy. All right, still this last 4 months, a little bit of sideways move. Coming off of this high, which was on 11.29, though, the stock's price is pulling back. All right, the stock, I know the nights that say me. Now we are the nights that say, I forget the rest of it. Anyway, watch this. Whoever gave me apps, are you in it? All right, I'm not saying, especially seeing how well it did earlier throughout the year, this may not be the right time. I do love the earnings per share, but I don't like the price action. Price action is telling me I probably shouldn't be in it right now. Next stock, Amazon. You're in it. So Arson, you're in it. Just be careful. Just be careful with apps. If you're holding it, there's really no need right now. The 3 and 8 are negative. If you're holding it, though, I'm going to give you a line in the sand. If it goes down to 622, that's probably a good opportunity to be out of the stock. All right, that's probably a good opportunity if you're holding it. I'd rather you have gotten out of it when the 3-8 crossed negative, but if you are in it, there's your line in the sand. All right, next one, Amazon. Was in a little bit of a channel, had a level of 1818 as a level of resistance, broke through nicely, followed through, 3 and 8 are in place. Watch the earnings per share, though. But the stock definitely is moving higher. I do like that. I'd wait if it sees it goes higher than that high right there. Wow. GSX, beautiful looking equity curve. Beautiful. 3 and 8 solid. Look at that get-in period right here with a 3-8 cross, broke through resistance, had follow through, tested it as a level of support, bounced off of that level and rocket. It was like a and it just kept on springboard right there. That level of support bounced off and went up. Love the earnings per share. Volume is pretty steady. All right, next stock. IMPUI, love that little platinum stock. Cheap stock, cheap platinum stock, rocking and rolling. Love that. Love that. Earnings per share looks good. Volume is kind of back and forthosity, but definitely moving higher. Love that little platinum stock. UFPI, I'm not feeling that. Looking from that high, what is the stock's price doing? Falling. Earnings per share looks good. I like the earnings per share. Not the right time to be in the stock, though. Stock is pulling back off of that high. 3 and 8 have crossed bearish a couple of times. Whoever gave me UFPI, are you in it? All right, and if you are, this is my line in the sand sitting at 42.40 if you're still in it. Other than that, I don't think it's the right time to be in it just based on the graph. All right, the stock has been steadily pulling lower from that high. All right, and the last stock, ERX. There's the energy. You want to see energy. Energy, I looked at USO for oil. I looked at UGAS for gas. This is the energy all in its own. It's telling you the story. It's been back and forth in a little bit of a channel. All right, so I'm not saying that energy is ready to rock and roll. It did bounce off a level of support. It broke through a level of resistance. The 3 and 8 are still in place as it pulled back. You know what I'm looking for? Let's break above this level of the high. The high is at 1902. Let's break above that to say that the market is out of, the energy is outside of this level of the channel. Whoever gave me ERX, does that make sense? All right, whoever gave me ERX, does that make sense? Especially if you're looking to get into energy, let it come to you. Don't try to second guess it. Don't try to pre-guess it. Let it come to you. Let's see if we can get out of this channel first. Let's go higher, about 12 cents higher than this level of the high. All right. I know I'm a little bit over. Joey's looking at me all through his neck, and there it is. But hopefully, this was the first Trending Thursday for 2020. Let me ask this question. Did you like it? Did you like the kickoff session for 2020? I love the idea, and it came across today. I was still putting my stories together. Joey was trying to make me get my stories together. And then I came across the article with the leaders and the laggards for 2019. I thought that was perfect for Trending Thursday. I thought that was perfect for Trending Thursday. So you got a list of the leaders for 2019 and how that watch list looked in VectorVest, and the laggards for 2019, how that watch list looked in VectorVest. Folks, if that wasn't enough to show you the power behind what our watch lists can do, I don't know what else could do. And those stocks could be any stocks that you want to put in. If you're new to the software, build a watch list. Let the watch list save you money from the onset. If you're new to the software, Joey put that link already in there. Put that link one more time for me, Joey. If you're new to the software, you're not a subscriber to the software, click on that link. Let the software, you listen to me talk, that's great. Let the software provide some information for you on a free stock analysis report. Click that link, and that's what it's all about. Analyze any stock that you want. You ain't got to listen to me. Let the software do and if you like what the software can do, take a trial. We give you a trial for $9.95 for 30 days. Take the trial. But most of all, especially if you're new, comment, like, subscribe. Comment, especially comment for me, folks. Comment. Tell me if you like the videos. Tell me you don't like the videos. Tell me what you want to see. Comment, like, subscribe. And as long as you subscribe and you hit the little bell, you'll be alerted to all of the upcoming stuff. So with that, folks, man, thank you guys for being here for the kickoff of Trending Thursday, January 2nd. Happy New Year to everybody. And my goal this year, 2020 vision, folks. Let's hone in and sharpen your investing vision. That's what we're going to do this year. So be here every Thursday. Every Thursday for Trending Thursday, we're going to sharpen your 2020 vision for 2020. I guarantee it. Now, I didn't say you're going to make money. If you follow what, because I don't want to hear Joey like, you told everybody, listen, if you follow what we show here, we're going to help you make money. All right, but we're gonna sharpen your vision. So I saw a lot of new people here today. Thank you guys for chatting in. All right, and let's keep Glenn out of the hospital. I'm working on it, Paul. All the people who did chat in that were new, thank you for doing that. And with that, folks, I'm done. I'm done. Joey's happy. Thank you. I'm done, Joey. Joey's making faces at me. He does that when I go over. But you know something? You're more important to me than Joey is. So I wanted to make sure I got those stocks up for you. With that, folks, have a great day. I'll see you next Thursday. Make sure you come back. Adios, arrivederci, ciao, au revoir, sayonara. I ain't going to see none of you tomorrow. Later.